So today's topic is not directly linked with earning money. Today's topic is more understanding of different milestones of a company, how as an investor or as a trader we can fall into traps. So there are a lot of traps with lot of wordings which happen uh, during multiple things of the life cycle of a company. So today I will try to share with you those wordings, what is the meaning behind those wordings, what are the traps behind those wordings, how to analyze it properly. So we will cover in life cycle. Uh, Again, this may not be linked directly to earning money, but these points are very important. Now, so there are typically four types of companies. First is proprietorship company. This is mostly at an individual level. How many of you have seen boards like in North? They'll see Agrawal and Sons, or some individual, like normally Kirana stores or some small businesses or brokerage house, small brokerage houses. They'll start a proprietorship company. How many of you have seen? If you have not seen, go to some old market in your city, you'll see a lot of proprietorship board. So you'll see proprietorship company or so and so sons, like that. You'll see those are proprietorship company. Typically for a business, there is no difference between the proprietorship company and the owner. So the like assets are same between the two. So anything wrong happens by the proprietorship company, the liability will come on the assets of the owner also. So that is how it's only one and the same. The company is opened more to regularize the business expenses so that they can save the taxes. Like for example, if you are buying a car, then if you have proprietorship firm and then you buy a car because of the business requirement, you have to go out and tour and all, so that becomes an expense. Normally, if you are a salaried person, you will pay the tax, then buy the car, pay tax on the car. So you are double taxed. If you are having a company, then from company's account, you can buy a car, show it as expense. So you save the tax on buying of that, even like that. So there is a advantage of having proprietorship company. Now, अच्छा ऐसा नहीं है कि you open a company and put all expenses in that and show like that. It cannot be done. Whatever earning you do, and there are some limitation. I'm just giving you advantages of proprietorship. Now, the disadvantage of proprietorship, if any default happens by the proprietorship firm, even the home of the owner can be sold to recover the like if you have the proprietorship company has taken loan from the bank, he is not able to repay, bank can as well sell the home of the company's owner and recover the loan. So they are both one and the same. So that is the drawback of proprietorship company. To overcome that drawback, that the bank cannot straight away come to the owner's assets and all, the second thing is limited liability partnership. So normally this is happening between two people. So two people or more people can come together. They'll say, okay, I'll put 1 crore, you put 1 crore, or whatever money they decide, and then they form a company. Now the liability of default, let's say that company takes a loan from a bank or from someone and defaults on that. So their home or their assets or their cars will not be sold in case it defaults. So this is called limited liability. So the liability due to default of non-payment of the loan or anything will be limited to the company's assets and not the owner's assets. So that is a difference between proprietorship and a limited liability partnership. Fine, so far so clear. Can I have yes if the difference is clear? Hello? Yes, okay, great. Then it's a private limited. The third type of company is private limited company. Again, it's by partnership. Like same like limited liability company, people bring in money. Similar the things are there. So almost everything is same between LLP and private limited. The difference between the two, between limited liability and private limited, uh, is that limited liability company, the compliances are less. Like you need not do board meetings, no MOM required. The audit also is very halka fulka audit. Formation of LLP is easy. Tax filing is easy. So LLP formation versus maintaining LLP, the independence in the partners in LLP is higher. Once you make it a private company, then the compliances increases. Board meetings you have to do, you have to get it audited, then you have to appoint two directors in the company to manage the company. In LLP, let's say if you have two partners, one because of unfortunate incident, one partner expires, only one partner is remaining, the company has to be closed. But in private limited, that is not the case. So that is the difference between private limited and LLP. Private limited is more paperwork to manage it properly, systematically, as per process. So that is the difference, majority difference between LLP and private limited. Again, private limited, it is very difficult to include a new partner because that will be governed by the LLP agreement, whatever was agreed by the partners. How you can include a new partner, any addition of new partner will be guided by that. But normally venture capitalist, like, why you want to increase the partner? Because if you want more fund, you are growing and you want to grow at a faster pace, bank will say, boss, हम इतना ही लोन दे सकते हैं, we can give this much loan only. Beyond that, you bring more fund, expand, we will give more loan. तो कंपनी क्या करेगा? दे वांट सम मोर फंडिंग, लाइक शार्क टैंक एंड ऑल. मेनी पीपल, हाउ मेनी ऑफ यू पीपल ऑफ यू, हाउ मेनी ऑफ यू have seen Shark Tank, that program that used to come? Shark Tank, है ना? Many must have seen for fun or something. So basically what they were doing is they were having an idea, they were having a company, they were running a company, they wanted to expand. So they went to those sharks there. So it was like fun filled, some anger filled, something ridiculous also show. But that is how the funding happens. People actually go to the VCs, venture capitalists, and say, okay, I have this company, I have this idea, I want to take it to the next level, I want your funding. So VCs normally prefer to fund in a private limited company. It is easier to fund for them in private limited companies. So this is where more funding will come. So first is conception, like formation of a company by few people. They will put their fund, they will try to grow the company, they will take loan from the bank or may not get the loan from bank, they'll grow it. Then they need more funds, then they will go to a VC, they'll say, okay, you please come and fund us. VC will come with his expertise and funding, they'll grow further, they'll go to the bank कि भाई हमारा business is going good, bank will also fund the loan, and then it will reach to a some optimum level where the bank will also say कि भाई इसके ऊपर हम आपको पैसा नहीं दे सकते, we cannot get more money than this. So now they reach to certain level after becoming private limited. Now in the what LLP and private limited, still the partnership is controlled by the promoters, who can be the shareholders, right? So promoters decide, they control whether which VC, even if VC wants to invest in their company, they can still choose, okay, this VC can come and fund my company, this VC cannot come and fund my company. So again, promoters are deciding who can be partners or who cannot be shareholders. Each person who brings in the money, they are assigned a share, and the face value of each share is 10 rupees normally in India. Face value, I'll show. For example, what is a face value? We can quickly see here in the listed company, how do you find a face value? let's say if I go here and if I say Infosys, and then, okay, where is the face value? Trade information, traded, total market, impact, cost, face value. Here is the face value. Can you see the face value here? This is the face value. And this is the current market price. So 1865 is the current market price, but the shareholders actually the face value is 5 rupees. So this is the face value of the share. Face value is 5 rupees. Market price is 1865. So this is the difference between face value and market value. So before they go, you can see the face value, right? Everyone was able to see the face value. This is the face value. I'll expand it here. See here it is written face value 5. Yes, everyone is able to see? Okay, great. So this is the face value and 1865 is the market value. Okay, so normally whenever a partner comes, let's say if he brings 1 crore rupees, so 10 रुपए का share करके he is given shares of like 10 rupees each. Let's say if I go with 1 lakh rupees to that company and say, okay, I want, before when it is LLP or a private limited company, I will go to them. I'll say, okay, you give me your shares. So they will give me shares of face value 10 rupees. Initially, uh, as far as I've seen, the before it going to public, the face value is kept at 10 rupees. So 10 rupees का share मेरे को दे देंगे for my 1 lakh rupees. Let's say if the company has grown, maybe they'll charge some premium and still the face value will remain same. Like if we see one more example, I think VDL is still, since it is a government company, let's say HL, let's see HL, how much is the face value? HL is also 5 rupees. Nike. What is Zomato? Let's say Zomato. See, Zomato, the face value is 1. Here you can see the face value is 1. The face value of share is 1. Market value is 263. So that is how they might have come with a face value of 1 rupee. So whenever you are going for IPO, you should look at the face value. You should not look at what price they are giving, because we'll come to that. Okay, so we have this private limited, public limited face value is normally 10 rupees in India when it is in this stage. Now, public limited. The fourth type of company is public limited company. A public limited company is turning from private limited to public limited. They will come with a IPO. IPO, they will come. Now they are giving the shares to the public. Here the control of promoters is loosening up. They cannot decide now who holds their share, because then we are the public. We today, let's say Amit buys the share, he is a shareholder in that company. I buy a share from Amit, tomorrow I am the shareholder. Then someone else buys, right? So Arvind buys the share, he says, okay, I'm the shareholder. So then the shares are available in public domain. Anybody can become the partner. They can accumulate the shares. So promoters will not be able to control who can be their shareholder once they go to public. Why they go to public? Why they go to public? There are 3 reasons for that. One is, see, a company is, you have to understand all the activity from the perspective of expansion. Okay, expansion of the business. I started small. I had, let's say, 1 crore rupees. I started a business. There is a limit to what bank will give me loan. I want to grow more. I will go to VC कि भाई मेरा business में please invest. He invested. My capital grew. Now, if my capital grows, I can go to the bank, boss, give me some more money to grow my business. So bank will say, okay, this much is possible to give. Okay, then it grows. So finally, it comes to a stage where VCs are not coming. You have to grow. Now, again, I have to expand my business. I need more money to expand. How will I get money? Then I go to public. Like there is a very crazy, one word had come, crowdfunding. The crowdfunding is happening for last 150 years. This is how the crowdfunding happens, right? They go to the crowd. Okay, boss, I want to expand. I want money. I'm bringing initial public offer. You take my money. So this is also crowdfunding, one type of crowdfunding. So IPO, they will go. So IPO, a company brings mostly for fundraising. All these activities are for fundraising. One more activity is debentures, selling of debentures which will come. That is also for fundraising. So a company wants funds, grow more funds. So they will have follow on public offer. So they have public offer. The company grows more. Again, bank se loan lega, सब कुछ लेगा. They will increase. Again, they'll think यार यहाँ अपना limit हो गया. Bank is not giving loan. We cannot sell debentures at a profitable interest rate. We want more money. They'll again go to public for follow on public offer. That is how. So this activity is linked to raising the funds. Okay. Now, that is the IPO's main objective, which should be ideally to raising the fund. But second objective, which is not publicized very much, is existing shareholders can offload their shares. Who are those existing shareholders? Who are the venture capitalists who invested when the company was getting formed? Now, when it is going to public, VCs want to withdraw their money to put in some other business. So they withdraw the money. How they withdraw the money? When it is going and being sold to the public, they offload their shares. They say, okay, I'm offering to sell. So that is they or promoter may say कि okay ठीक है मेरा business बढ़ गया, I want to offload my shares. They can go to public. They can give it to public during IPO. Better market once you are putting in IPO, it is free float to market. Market decides the price of your company. Further FPO when it comes, you have a better valuation, better fundraising for your company. So that is how it happens. Okay, clear? So far so good. Can I have yes from all of you? If this so far it is good, can we go ahead? Okay, great. So let's go ahead. So what happens when the IPO is coming? When the IPO is coming, typically a company has to be run as if it is already listed on the stock market for 3 years. So prior to IPO, all the compliances have to be done by a company. They have to do board meetings quarterly, audited financial returns, AGM, recording of all the meetings, important board meetings, everything recording, what all compliance is by National Stock Exchange and Bombay Stock Exchange. They have to do it for 3 years. Then they go to merchant bankers, registrar, bankers, underwriters, and market makers. Why? So these are called IPO intermediaries. Why the company goes to them is because merchant bankers and all, they will do the assessment of the company and tell them, okay, you can bring your IPO at this price. You can offer per share at this price. So they do evaluation and also see the market, whether it is a bull market, bearish market. Based on the market condition also, they tell them कि आप इतने में अपना शेयर खपा सकते हो इस मार्केट में. So they will bring that optimum price and suggest them. In case IPO is not getting subscribed fully, then the underwriters will come. They will pay the money and subscribe the IPO. So there are underwriters also brought into board कि भाई अगर हमारा fail होने लगे IPO तो आप पैसा लगा देना. So underwriters are there to fill the money. They are paid some or they get some discount, something like that. Market makers are those people from whom you get recommendation for this IPO. So it is not that it is a coincidence that there are so many IPOs, but you come to know about some few IPOs, some hype is created. Say different, let's say this falana IPO, like I don't want to name the stocks, but you would remember, right? A lot of stocks they listed, then few days after that they crashed. Because why they were listed at very high price? Because they got hyped. Oh, fantastic business, nothing like this. This is the future, blah, 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 blah. That is the market makers. They are also pulled in. So they will do a lot of advertisement, a lot of talking on news channel, this, that. And they will attract the attention of the common investor to invest into that, subscribe into that. So market makers are pulled in. So we should be very careful when IPO, when you hear too much about some IPO, it may or may not be good. So then comes to face value and the premium. So like I told, face value, 10 rupees is the face value, and the premium. Let's say any stock, any IPO which comes, okay, IPO is offered at 160 rupees to common shareholder. 160 is it consists of two parts, face value, which is let's say 10 rupees, and the premium. So 150 will have two parts, face value 10 rupees and 140 rupees premium. What company is trying to sell you at a premium. So you are buying a 10 rupees share for 150 rupees rupees. In the IPO, it has got its own premium. Again, when it comes to market, it will go up. Then there are two types of offering. I have not seen book building offering for quite some time. Earlier, it used to be there. Nowadays, fixed price offering is coming. So they'll say, okay, I'm giving you this share for this much price. You have to subscribe to it. Book building is, they will say, okay, you have to bid how much you are willing to pay. That is called book building. So they will offer IPO. They'll say, okay, book building, the offer price starts from 100 to 120. So as an investor in IPO, you have a choice whether you bid for 100 rupees or 120 rupees. In this case, what you should do as a common investor doesn't make any difference. If it's a book building offering, as a common investor, you choose the 120 rupees. If they're asking 100 to 120 band, and then they say, okay, आपका जो मन करे 100 to 120 के band में, you put what price you are okay buying this share. Because you and me, we don't determine that average bidding process. Those will be defined by bigger institutions, DIIs, mutual fund, like that, when they are bidding in the IPO. So as a common investor, if you come across a book building offer where they give you a band, bid for 120, nothing will happen. Whatever is the final issuing price, let's say they finally decide, okay, average price by big institutions and everything has come to 107 rupees. If you are allocated the shares, you will get the allocation, and balance 13 rupees also you will get back. So need not worry कि यार मैंने 120 लगा दिया तो पूरा चला जाएगा क्या, नहीं. You will get back the difference even if you are building on the higher side. So that is a book building offering. Fixed price में तो कोई choice नहीं है. They will have number of shares is offered for a common investor. You have to invest. Normally, I don't prefer putting money in IPOs. More like a lottery. I have not put in IPO for very long time. People put it is okay. I'm only sharing my personal what I do normally. Then what is red herring prospectus? So whenever they are coming with a IPO, they have to issue a red herring prospectus. Red herring prospectus is nothing but what we have been doing for last 3 years. It's all about the company. What they have been doing for last 3 years, how they have been performing for last 3 years, what is the profitability for last 3 years, who are the shareholders in their company. So it's a prospectus which they give. That who we are, they are introducing themselves to you. How many of you have applied in IPO? Can I have yes if you have applied in IPO anytime? Yes, no, no, yes, yes, yes. Okay, great. Okay. How many of you who have applied in IPO have gone through the red herring prospectus? You have gone through the red herring prospectus. Okay, great. I have one person. Excellent, sir. If you have read the PRA and Trant, right? So if you have read the prospectus, fantastic. You are a good investor. So Amit is saying never. Okay. Okay. All those who said yes, they have invested in IPO. Can I have honest feedback? Have they gone through the red herring prospectus or not? Okay, great. So can I safely say that 98% of people who apply in IPO, common investor, don't read the red herring prospectus? Maybe they don't know there is something called red herring prospectus, right? How many of you who are applying in IPO have come to know today only that there is something called red herring prospectus? Okay. So there is something called red herring prospectus, which is the lekha jokha of the company. What it does, it is a mandatory thing to publish while they are going for IPO. Okay. So So Atul said I was aware of it, but never read it. Yes. So 98, 99% people, because right now also we are seeing only one person. Mr. Pran is only reading that red herring prospectus. Others are saying, okay, IPO laga do. But please remember, what you get on social media, on TV news is made by all these people. That information is made by all these people. Red herring prospectus is the actual what it represents. उसमें marketing material नहीं हो सकता. उसमें उनको numbers ही देने पड़ेंगे कि what we have been doing, how much profitable we have been year over year, what is our sales growth. Then we have to look for red flags into red herring prospectus. Why I have brought this is before applying. See, it may list, it may go up. Okay. But as a intelligent investor, we should be always looking at the red flags in red herring prospectus. What are those red flags? Whether to invest in that IPO or not should be decided. Whether the company is profitable for last 3 years or not. They'll future bright hai, phalana, and all that. And when you see the prospectus, it is having loss year over year. भाई loss making हो तो इतना right. इतना तमाशा क्यों you are doing loss making and then sales growth may not be there. Red herring, you might find that sales is declining, profit is negative, still ho halla full fantastic future of the world is what technology these people are having. They might be having very small component of that technology, but it will be presented कि नहीं यही ये काम लोग करते हैं. So you have to read through that red herring prospectus to look for the flag. Second biggest flag is whether the entire fund, whatever they are collecting in IPO, will go in the company for expansion of the company, or the existing promoters and existing VCs are offloading their shares to the common public. If they are offloading, then it's not a good sign, right? If they are, it has to be mentioned in the prospectus that okay, so much amount of shares will be offloaded from the proceeds, so much will be coming in the company. See, ideally, if I'm investing in someone's company and if the owner he himself is offloading his shares, do you think he's having trust in his own business? If let's say VCs who have invested in that business for last 3 years, 4 years, they are coming out, promoter is also coming out, public ko chipka rahe shares, is it a good scenario? No, it is not good scenario. But no marketing person will tell you ki nahi, these people are doing like that. You have to read where will my proceeds of this IPO will go, whether it will go to company or some percentage is okay, 5-7% of promoter selling, usko bhi thoda paisa kamana, his selling is okay, still manageable. You have to see whether it should not be disproportionate, that 50% of your money the VC is taking away, only 50% is going into company. That is a red flag. Thoda bahut chalta hai, not one. Then what they are going to do with my capital? Let's say IPO mein paisa aa gaya company ke baad. They have to tell what I am planning to do with the fund money, whatever I am raising, why I am raising, why I need this fund. You see, if they go to bank, they have to give full project report. Ki sahab, I am going to invest this. I want your loan because I will be going and investing in this land, this factory. This is the machinery, everything they will have to present. Then only bank will give them loan. IPO is like taking loan from the public, funds from the public. They should at least confidently mention something where I'm going to use the fund. So if the prospectus is not very convincing where they are going to use the fund, again, it's a red flag, right? So these are few red flags. Don't have a FOMO that if I apply, if it goes up after subscription, kuch nahi hoga. We can always buy at a decent rate after it is listed. So if you don't find the prospectus very nice, don't apply. Don't play a lottery system ki lag gaya, upar gaya, I'll sell in 2-3 days like that. Okay. So how many of you got some new information today as of now? Something new to learn? Something interesting with the IPO? Okay, great. There is one question. What is there? How do face value being derived and what parameters? Face value is 10 rupees. Normally, all companies when they start, LLP company, private limited, in India it is 10 rupees. So that traditional hai. How that 10 rupees is derived, I don't know. Traditionally, face value is 10 rupees. They can make it 5 rupees in the like divisible, like 5 rupees, 2 rupees, 1 rupees. That is how the face value is there. Traditionally, it starts with 10 rupees. Okay. When the split, I'm coming to the split part of it. तो अभी हमारा हो गया है, IPO launch हो गया है. While analyzing stock, should we consider face value? Mostly, it is not very relevant. Face value, once it is in market for 10 years, it is not very relevant. I'll come to the face value and split and everything. So hold your questions there. We have to cover all that things. So what is oversubscription? IPO is coming in the market. People are very enthusiastic. Fantastic marketing is done. We are having a bull run. Everyone wants to invest somewhere. Oversubscription happens 7 times, 8 times. This is not the reflection of quality of the share. Please make a differentiation. If the share is oversubscribed, within 10 minutes, it got oversubscribed 50 times. Makes no difference whether the company's quality or not. Maybe the marketing team was very good, right? Like we had a poll just now, our 80-90% of our retail investor never went through the prospectus, right? They don't know whether what company is going to do with their money. That is how the marketing plays out. So oversubscription, yes, up to some extent, it shows the liking towards the company or enthusiasm towards the company, but does not speak about the quality of the company. Okay. So that is how you should take the oversubscription. It may give you some jump if you are allocated. It may give you some jump return on listing, but that's it. That's the importance of oversubscription. Not more, not less. Maybe 1 month, maybe 2 month euphoria. After listing, then it dies down. If IPO is not fully subscribed, then it's not a good for company. They'll find difficult in like if it is not subscribed more than 90%, whatever they are offering, if people are not ready to take more than 90%, they have to withdraw. It falls back. So they normally keep underwriters ready that if it is not subscribed, underwriters will subscribe to it, make it the subscription full, because if it is undersubscribed, they'll have to withdraw the IPO, and then it's very bad for company. And I think they cannot bring the next IPO within 6 months of withdrawal of first. Like all of you remember, after in 2023 February last year, Hindenburg report came. Adani Enterprise came with a FPO, follow-up public offer. Hindenburg report came. There was poor subscription of their FPO. FPO was likely to fail, so he went to all his friends, and then big companies, big players came in and subscribed. So it got subscribed completely, and then it was withdrawn. It never went through. So everyone's money was given back, but the subscription was made successful. That FPO, it got subscribed fully by all the big players. They said, okay, नाम खराब नहीं हुआ, अभी market में नाम है. Then they withdrew, the FPO was withdrawn. Everyone was given back their money. So that is why if it is not fully subscribed, it is not very good for the company. So they make sure that they are doing right marketing, right pricing to get it subscribed fully. So this is withdrawal SPO. So we have IPO, and then subsequently FPO. So first IPO will come, then the stock will grow, then the company will see, okay, so ka stock laya tha, today it is 500 rupees. We can go for further funding. Like again, it is linked. FPO, IPO is for funding. They'll go for funding. They'll bring in FPO. So this is the FPO, follow-up public offer, or SPO is subsequent public offer. So somewhere it is called SPO, somewhere it is called FPO. Now, this is a very interesting fact if you are an investor in stock market. IPOs and market life cycle. So if you see that every Tom, Dick and Harry is coming with the iPhone, you can change your how it is appearing. It is appearing as iPhone to me. Question. So FPO is to raise more capital. IPO, FPO, everything is to raise funds only. IPOs and market life cycle is very important. Higher the number of IPOs, like when you see, if you are a market observer, if you see every Tom, Dick and Harry is coming with the IPO, this IPO, that IPO, the number of IPOs coming in the market increases substantially. Then, as prudence says, as it has been observed over the years, that signals the end of bull market, right? The bull market is, bull run is nearing, where you have a lot of IPOs. So you should be cautious for investing, or even if you have existing investment, you should be cautious about your investment and make some value investments only. Then there are bear runs, bear market. So in bear market, you'll find nobody is coming with IPO, because it will be very difficult to raise. Market sentiments are low, investors are not putting. So the IPOs will dry out. So you'll hardly find one IPO, two IPO in 1 month, right? So when the IPOs dry out, and rarely there is one IPO, you can understand that is the end of bear market. The market is likely to go up. So from IPO itself, you can assess in which stage of market we are there. Too many IPOs, we are at the end of bull market. Very little IPOs, we are at the end of bear market. So that is also one indication. After listing, mandatory to remain listed in NSE, BSE, board meetings every quarter, financial results, audited results every quarter, AGM every year, financial results, board meeting, MOMs, declaration, everything they have to follow. This will, all detail will be available on NSE and BSE. Then now few important points and how people get excited. Okay. In the company's journey. So that is okay. Every year they'll make profit, business, वो सब होता रहेगा. So like we say, na, my ex-girlfriend, my ex-boyfriend, my ex-neighbor, we are very excited about X. So whenever we talk of present person, we are not excited, but we are excited about X. So same way, people are very excited about X date in stock market. So X date is very, that EX है, वो X नहीं है पुराना वाला, but just to create interest, I'm saying. So X date is there. So there will be X date for dividend. What is X date for dividend? They will have board meeting. Board meeting, they'll decide that on such and such date, let's say on that X date, whoever is holding the share will get a dividend. So what happens is the market price starts going even before the dividend. Let me show you some example if possible. Interesting example. Oh, hold on. Just give me 1 minute. Okay, so let's see what we can get here. Still loading. Okay, let it load. We'll go back. We'll complete that and we'll come back to this. So normally people get excited. Now please remember, you will get dividend only if you are holding the share. Let's say dividend at आज क्या तारीख है अपनी? Today is 23rd August. 24th, 25th is Saturday, Sunday, 26th Monday. Okay. 26th Monday is the X, let's say for any company, 26th on coming Monday, 26th is the X date for giving dividend. What does it mean is on Monday, if you are holding the share in your demat account, then only you will get that dividend. Many people do this mistake that on X date, right? X date is when, if you're holding the share on that day, you will get the dividend. Now if you buy on 26th, let's say coming Monday, if that is the X day, and if you buy on that day, the share will not come in your demat account on the same day. It takes 2 days to come in your account. T plus 2, trade plus 2. So if you're buying on Monday, the share will come in your demat account on Wednesday. So you will not get the dividend. If the dividend X date is Monday, you have to buy on Wednesday. So it will be T plus 2. Wednesday is the trading day. Thursday, Friday. Friday you will get the share. Then only Monday you are eligible for getting the shares. Oh, sorry. Even on Thursday, if you buy, trade is on Thursday, Friday is working, then that is one. Monday is second day. So Monday you will get the share. So then only you will get the dividend. Many people buy on the X date and then say कि यार dividend नहीं आया क्योंकि आपने. Same is with the bonus share split, buyback, rights issue. There is a X date. So on that date, if you are holding the share, then only you are eligible for all this. Otherwise, you are not eligible for all that. Okay, trading view is not opening. Okay, if it opens, then we will. Ah, it has opened. Okay, by the time it opens, okay. Looks like Trading Corporation has, let's see, Infi. Infi is a good example. Okay, see here, you can see Infosys. If you can see the at the bottom, D is written. So this is D, dividend X date. Okay, this is not X, this is EX. So X date is Friday 31st May 2024. So whoever is holding the share on Friday 31st May 2024 will get a dividend of 28 rupees per share, and payment will be made by Monday. So they will be paid on Monday in their account. So you should be having that. So every company has to declare dividend much before this. So it's not a surprise. They'll have board meeting, then they will declare, okay, we will be giving dividend and all like that. So here is normally थोड़ा सा tricky होता है. See, what happens is many times if the like if you will see, normally Infosys वगैरह नहीं करते, but you can make out few fine things, fine you can observe on your own. Normally, sometimes the dividend date is before the earnings date. So this is E and this is D. Okay. Normally, Infosys I have not seen they do this, but few companies try to manipulate the, not manipulate, it's little tricky to word it, but my interpretation is like this. This is the earning date. This is the financial, like how they have been doing in last quarter, what has been their profit and all like that. Sometimes companies say, okay, board meeting में declare किया कि साहब will give dividend. Normally they will keep dividend little bit after the results day, quarterly results. If, and they have to declare in advance that, okay, on so and so date, we will give the dividend, so and so date, my audited report will be given. Normally, I have seen if the dividend date is later than the earnings date, after the earnings date, the financial result is likely to be little weak. So what they do is कि people should not sell off immediately after the earnings कि bad result आ गया, people will start selling off the share or something like that. they थोड़ा incentive रखते हैं कि बस रखो, पकड़ के रखो shares, you will get dividend after, so let's say 10 days 12 days you will get the dividend. So don't sell off in panic. So many people will hold on, नहीं नहीं यार dividend तो ले लेते हैं, I have been holding it for some time. If the financial result is likely to be good, then the dividend date will be before the earnings date. तो dividend भी ले लो, earning बढ़िया रहेगा तो stock ऊपर जाएगा. Many times it works like this, many times it may not work, but majority of time I have seen both will come. If dividend is after earning, थोड़ा earning कमजोर रहेगा. If dividend is before the earning थोड़ा मजबूत रहेगा. So that, and sometimes it both coincides also. So that is how market chalta hai sab system. Okay, so okay, so sir, dividend, some tell that nahi, if you're holding that day itself, you'll get the dividend. Whether if your objective is only to get dividend, then that day you should be holding. Yes, dividend date ka thoda din pehle you should buy the share. That will come to strategies. Bonus share is if you're holding a share, you'll get some additional shares, but the price on the X date will reduce by the same ratio. If you're getting one bonus share for one share you are holding, normally company says कि नहीं, dividend will not, because dividend is payout. Again, the challenge with dividend is if it is paid out, you receive the dividend, it is taxable as per your income tax slab. Let's say someone is in 20% tax slab, he receives dividend, that dividend is taxed at 20%. If you are in 30% tax slab, you get the dividend, that dividend will be taxed at a 30% rate. So that is how it is taxed. Okay, 1020. So I'll let me see how many points are there. It's okay, na? 1040 we can go. Everyone is okay. I'll cover this till 1040. Okay. So, okay, great. Thank you. And at 10:40, 10:45, I'll be covering all the, I have some few five slides more. I'll cover in next 10-15 minutes. So dividend again, what I was telling, dividend taxability. So it is now taxed in the hand of recipient of dividend. If you receive dividend, you'll have to pay tax as per the tax slab. Earlier, I think 5 years ago or 7 years ago, it was non-taxable. So any dividend you used to get, it was not taxable. So that is how the government changes the rule, which is, as per me, it is good also that it is taxable in the hand of recipient. Uh, because you and me, we get some few thousands only, let's say some 5,000, 50,000, something like that in dividend. But imagine who is having crores of shares, he will get dividend, he will not pay the tax. So it was non-taxable in his hand. Let's say the promoters who are having lakhs of shares, they'll get lakhs of money with that 28 rupees, and someone is having 1 lakh share, he'll get 28 lakh rupees from Infosys, but he will not be taxed because earlier, 7 years ago, that was non-taxable. Now he or she will have to pay the tax. So वो भी एक अच्छा है, government is taxing them and taxing us also. वो खराब है, वो नहीं होना चाहिए. So that is a dividend rule now, taxation rule. Bonus share is company will say, okay, I'm not giving dividend because it might get taxed. My shareholder might get angry, but I'll give the bonus share. So instead of giving money, they'll give bonus shares. Okay. Okay. So I'll finish this slide and take the questions. Okay. Now, so bonus shares, instead of giving dividend, they'll say, okay, we are not giving dividend, we'll give bonus shares. So that is one way of rewarding your shareholder. You get some bonus share, 1:2, 1:0.5. So everyone share you're holding, you'll get one share, 1:1, 1:2, 1:3, like that, or 3:1 ratio. They'll say, okay, how many shares? And on next date, proportionately the share value will fall. So you must have observed कि अरे आज share fell down by 30%. What happened? Maybe they have declared the bonus share. That was the X date for bonus share. Hence the price went down. No need to panic. See what was the X date. Maybe if you are not following the share you are owning, but you can always go and see कि यार एकदम से 30% क्यों down हुआ. Maybe X date for bonus shares or split. Like split is what is split? What happens is, let's say if the share value goes to 10,000 rupees and the face value is 10 rupees, they will say, okay, what we will do is we'll split the share. What they are splitting is they are splitting the face value. From tomorrow, each share will be of 5 rupees face value. So they are splitting the face value from 10 to 5. So they are splitting the share. So if you're holding one share, after split, you will, whatever is the ratio, 1:2, 1:5. 1:5 means 10 rupees face value, they are making for 2 rupees. Like over the period, Infosys has split from 10 rupees to now it's 2 rupees. Earlier, when it was initially, whenever it came into market, it was face value of 10 rupees. Then they split to keep the price affordable to the common investor. Because generally, we see if a share price is of 15,000 rupees, common investor will not buy. भले ही वो उसमें 15,000 ही लगाने वाला है, but he will not buy that because he'll say नहीं यार 15,000 is very costly. So they, to keep it attractive for common investor as well, they will split the share from 10 to 2. As such, there is no much advantage for the company by splitting. Only thing is they are creating some more space for it to go up because of the psychology of the investor. That if it is 15,000, he will not buy. If he is not buying, it is likely to go up with a slow speed. So if they want to increase it, they'll split the 15,000 share, face value 10 to 5. So 15,000 becomes 7.5. So face value becomes 5 rupees. Again, people will be interested. Or if they make 1:5 split, 10 rupees face value, 2 rupees का 5 शेयर बना दिया उसको. So 15,000 current market price will come to 3,000. Again, it becomes attractive for common investor. सब रहता है. Then buyback again. Company will say, okay, we are buying, want to buy back the shares. Someone wants to give us, please give it. And normally, as per the SEBI guidelines, the buyback offer has to be higher than the average market price of 6 months. Now, what happens is people get excited. Many times you'll see Infosys ka buyback is there. So current market price is 1,000 rupees. They'll buy back at 1,100 rupees. So people think ki yaar, if they're buying back at 1,100 rupees, the share price will go up. It will not happen. It may happen, may not happen. Mostly it will not happen because they are not buying back the entire share. So why it should go up? They will buy back only few shares. So it will not push the price to 1,100. So normally this is a trap which common investor falls, that 1,000 rupees is the current market price. They have offered 1,100 because they are supposed to offer a buyback, that we want to buy the shares from the market. Company offers buyback. They have to offer at a higher price. They'll buy at 1,100. And they'll ask whether you want to give or not. The limited shares will be bought back. Common investor क्या सोचता है, like you and me, common investor like you and me, अरे Infosys is buying at 1,100, right now current market price is at 1,000, definitely it has got a higher value, so the entire current market price will go till 1,100 and they start buying. ऐसा नहीं होगा, होगा ये जरूरी नहीं है. So don't go and do that things. Buyback वगैरह से excited होने की जरूरत नहीं है. It will not move the market. Little bit flutter will be there. Rights issue is, if you are having shares, they will offer you, okay, the follow-up public offer will not be offered to everyone, only to the current shareholders, to incentivize the current shareholders. If you want to increase your shareholding, you can apply in the, only the shareholders can apply in the IPO, FPO, we can say. So that is called rights issue. Rights issue is only for the shareholders, only, which is again a good thing. That will also increase the share price. So this is also sometimes done to increase the share price. Okay, so I'll pause for a minute. I'll take the questions. If you have any doubts. So first question is, how does company benefit by the increase in value of share in the market except for the raising funds? See, that is how they will raise the funds, right? Plus, if it is increasing, the market value is increasing. Let's say Adani is having a business. Tomorrow, if he comes with Adani Power, right? And if you see कि भाई Adani Enterprise का share बढ़ा हुआ है, then he comes up with the Adani Power. Then you have confidence also ना कि हाँ उसका first his share was very good. He has come with a new IPO. This company might be also good. Let's invest in that. So his new businesses will get fundings based on the performance of his stocks previously. कि इसको business करना आता है. His share is creating value. Like Reliance is coming now, people are waiting for more offer from Reliance, right? So that is also helps them for raising funds. Typically, at the end of the day, it's a raising fund for the company. For investor, it is a creation of value. अब वो अतुल saying why MRF is not splitting, वो उनका मर्जी है, उनको नहीं बहुत टेंशन है. So they are not splitting, they are happy. So I cannot say क्यों नहीं कर रहे. It's their okay. So why MRF, if the RHP has major chunk of proceed to be used for repayment and other prepayment of portion of certain understanding borrowing. If RHP, okay, red herring prospectus has major chunk of proceed to be used for repayment and or payment of all or portion of certain outstanding borrowings availed by the company, that is also okay. But preferably, Sanjay, would you like to invest in a company who is repaying its borrowing? Their shareholders are going out, or you would love to invest in a company when they take money from you and invest in a future expansion? What is your personal preference?
It depends on if it is borrowing clear but there's a profit,
Huh.
then maybe it's good
Correct.
because they are clearing their debt. But if
So
this is in
if
loss,
they are clearing their debt with my money, see, you have three options. Okay, let's say if you have a company's prospectus, one is the existing promoters are selling off their shares. Okay. Second option is whatever money I am giving to them in IPO, they are clearing the borrowings. Everything is going into borrowing. I'm just exaggerating. And third option is whatever I'm giving them money, they will be using for the future expansion.
future
Right.
expansion is best, I
है ना?
think. But
So that is how we have to see proportionately. See, the face value is how much percentage is going to repayment of borrowing, how much they are coming out, how much is for future expansion. So again, they will give proper proportion that okay, I'm maybe 10% I'm giving away this borrowing. ठीक है, थोड़ा सा एक विद इन लिमिट्स इट इज ओके, पर ऐसा नहीं होना कि मेरा जितना भी वॉट एवर मनी आई एम गिविंग 80% विल गो इनटू repayment of borrowing. Now, why you have to repay the borrowing? Why are the borrowers not having confidence on you? That is the second question which will come in my mind. Why you are borrowing from me when your earlier borrowers are not having confidence on you? See,
true.
understand one thing. If you take a home loan, correct?
Yeah,
If you repay it, we have CIBIL score and all, correct?
correct.
Why CIBIL score is there? That means you are a person who repays promptly, don't default on the loan payment, like that, correct? That is what is the crux of
Yes,
CIBIL score, correct?
yes,
Why CIBIL score? Because based on that, the lenders will come forward to you कि भाई और पैसा ले लो, take some money from me, because they know one person with CIBIL higher CIBIL score is having a good tendency, so that उनका पैसा डूबेगा नहीं, correct? So a company's, if he has to take money from me and give back to that borrower, इसका मतलब एक possibility है कि that borrower is also troubling him to give back the money. Correct?
yeah,
Why borrower wants the money? Why he is not ready to give you more? That question should arise in our mind. So we should be very critical कि why you are giving my money to that borrower? Why you are raising the money and you are giving to that borrower? What is the reason? Is he not happy with your repayment? What is
true.
happening? Because
And if
once we are
company is
shareholder, we will not get repayment, right?
true,
And tomorrow, if the previous borrower himself is not happy, how I am going to raise more fund from banks and all? So that is how we should like critically like scrutinize the company prospectus. Key, why he is repaying? Why he cannot put all money into this? Where he is putting? Does he have a business plan? Right. So even if our friend comes to borrow money, we'll ask five questions to him: why you are taking money, what happened, why you did not manage your own money, you have a good salary, or why you need more money, when you will repay. All that thing, even for our best of best friends, we may not ask so many questions directly, but still we will ask कि भाई क्या हो गया यार, ऐसा क्या हो गया, why you are taking money, right? And here we are giving an IPO, so we should be scrutinizing it because they are not our friends, right? So we should be scrutinizing it more diligently.
true.
Okay, so why do company go for a buyback? I have no answer as such. What is a very much diligence? Maybe they want to create like investor confidence. It builds more of an investor confidence that yes, company is doing good. They are having extra money. Many times they have extra money, but they don't know where to invest, so they buy back, so that the valuation of the stocks go up. Since the face value of share is fixed, then why does the price increases or decreases in the market? Okay, so face value is fixed. It is like apartment, right? If I buy apartment or a home, uh, see apartment. If I'm buying, let's say one home, one land, and okay, I'll take the apartment only. If I'm buying apartment, that apartment has fixed rate, right? It has got the cement which is used, the iron, the steel wheel, sab milake, whatever was the basic cost, it is fixed. Over the period, it will only depreciate. Still, the price of my apartment goes up. Why? Right? So same is the face value. Face value is the, let's say, cement, concrete, vagare, and market price will increase, decrease. Why? Because the company is growing. The company is creating profit. The profit is coming in the company's bank account. You are the shareholder. You are the owner of that profit. As the company will grow, the profit will grow, and your profit share in that company will grow. Hence, your market price of your share will grow, because whoever wants to become owner of that profit will have to buy the share from you at a higher price. Can we earn more money only through dividends, seeing the stock's dividend dates? No, it is not like that. It can never happen like that. There is a lot of game happening 1 month before the dividend, after the dividend also. So don't do. We'll see some strategies. The two strategies I'll share for the earning and dividend also in coming days. Okay, no more questions. Okay, we'll rush through some things now. Dividend we have gone. Now merger, demerger, delisting, relisting. So companies merge, come together. So when the companies are merging, they will declare, okay, 5 share uska, 3 share iska, नई company का. If you have 5 shares of that company, when two companies are merging, so they will come to understanding who is having more assets and all. They will do their calculations, and they say, if you are a shareholder of X company, then after merger you will get 1 share of the new company or 5 shares of the new company. So as a shareholder, merger, demerger, this is the advantage. You will get some shares. Demerger happens, like a big demerger happened long ago. Anil Ambani and Mukesh Ambani demerged Reliance. Like a lot of spin-off was there. A lot of companies were formed. So whoever was holding Reliance company share, they got a lot of shares of demerged company also. And then it again went up in valuation. So that is a demerger. So when demerger happens, if you're having the share of parent company, you get the share of the demerged company also. So normally in merger, the share quantity will go down. Demerger, your shares quantity will go up. Delisting happens when the company decides ki bhai we are not going to follow all that kagzi karwai of what we say AGM, GGM and all that. We want to delist. We will revamp ourselves again, come again. Isme normally, if you are holding if company announces delisting, better to exit those shares. Normally people jump to buy those shares कि जब listing होगा मेरे को बहुत पैसा मिलेगा, मत करो ऐसा, निकल जाओ, बाद में देखेंगे. Relisting, after delisting, they again come for a relisting. Then debentures, again one way of taking up loan. You take the loan from the bank, or you take the loan from the public. So taking loan from public is called debentures. Debt funds, also mutual funds, debt funds, they give the loan to companies via debentures, so they get some fixed interest. Convertible debentures, nowadays it is not coming. Earlier used to come. Convertible, that means you buy a debenture and after X date, instead of debenture repayment, like if I'm giving loan 10,000 rupees to the company, after 5 years it has to repay me the 10,000 rupees plus the interest. So company may say, see, I'm giving you convertible debenture. After 5 years, I'll not repay you 10,000 plus interest. I'll give you X number of shares that time. It was very attractive. Reliance used to come with a lot of convertible debentures, and people used to go for that. So, and there used to be partial convertible debentures. So 50% I'll pay you, 50% I'll give you shares, and people were really excited. So that was, for good companies, it was a very good proposition those days. Nowadays, companies are not coming with convertible debentures, but still option is there. Now, final slide, when the company, let's say it is doing very bad, it is going into loss, and then they say, bhai, I am not able to pay the loan also, repay loan also. Now I want to close my company, or at least I want new loan. I cannot give any guarantee to you. I want some new loan. Then it goes to NCLT, National Company Law Tribunal. When the banks take the company, so this is the last stage. This is not a very good stage. So if a company is case is running in NCLT, matlab wo bad shape mein hai. Even if the stock is being traded in the stock exchange, any company's case going on in NCLT, not a very good thing. That means they are defaulting at many levels. You have to really, really scrutinize that company. They say na आंख में तेल डाल के you have to scrutinize that company whether how is the company. Better to avoid. NCLT, when it goes, NCLT might say, okay, you sell off all your asset, repay the loans, or they can ask banks कि भाई देखो इनका क्या business proposition है. If you want to give loan on new terms and condition, you give. So it's like it's between closure of the company and revival. बहुत thin line है यहाँ पे, and a painful thing if it goes to NCLT. If NCLT says कि नहीं बंद करो company, sell all the assets, then please remember, as a shareholder, you will not get a single rupee. After selling the assets, the first thing will go to the bankers. Then if money is left, it will go to the debenture holders. If at all something is left, it will come to shareholders. Normally, nothing comes to the shareholders. So that is how the end happens for the company. With that, we come to the end of today's session. Hope you got some understanding from start to end, how it happens, what are the important edge dates. So how many of you have learned something new today, something interesting? Okay, great. Great. Any questions we have? Anything related to what we covered? Okay. Please upload. ये question हाँ ठीक है. I have 3 recordings to upload: ADX, retirement plan, and this one. So I'll upload. By now, I have covered almost out of 50 topics. I have covered almost 30-35 topics. Though the sessions are less, but lot of इसमें भी हमारा must know में we have covered lot of topics. So another 10 topics are left for 10 more sessions. We'll be having on remaining. We'll cover in another 1 month or so. Okay, so what happens to share of delisted companies? You get nothing. If you're lucky, when it is getting relisted, you might get a higher price. Otherwise, it is a gone money. Okay, great. So thank you so much for joining today. Thanks a lot. See you on Monday with a new topic with something interesting. Thanks a lot.